Right Honorable Prime Minister, Dr. Ruhakana Rugunda, representing His Excellency the President of the Republic of Uganda, Honorable Ministers and former Ministers present, Honorable Members of Parliament, distinguished guests, ladies and gentlemen, all protocol observed, a very good morning to you all. I thank you very much, Right Honorable Prime Minister, and all dignitaries and invited guests for making the time to grace this occasion. We're indeed honored and privileged by your presence. Your Excellency, as His Excellency mentioned in his speech during the State of the Nation and the budget speech, he did say that the economy is on the right track, and that inspires a lot of confidence, which is critical to those seeking capital to expand their operations and those seeking to invest in these companies that are seeking capital. Indeed, inflation over the past 20 years in Uganda has been an average of about 7.4%, and the Uganda shilling has devalued by an annual average of only 5.5% to the dollar over the past 25 years. This is further testimony of the importance of sound economic management, and we'd like to thank His Excellency, through you, Right Honourable Prime Minister, for your leadership in ensuring sound macroeconomic stability. Ladies and gentlemen, allow me to provide some background information to the thinking that led to the development of Uganda's Capital Markets Development Master Plan. Globally, there's a pool of about $45 trillion available in long-term savings seeking investments all over the world. Of this amount, about $9 trillion is currently earning a negative return because of the prevailing low interest rates in the world. This is a very attractive prospect for capital markets such as Uganda and East Africa as a whole, which have over the years provided positive returns in spite of several bottlenecks. 19 countries in Africa, including Kenya, Tanzania, and Rwanda, have so far tapped into this international pool of savings through sovereign bond issues. Uganda too can tap into these pools of savings through infrastructure projects or other large-scale public or private sector ventures. Domestically and indeed regionally, pension savings have been growing at about 28% annually over the past 5 years and are currently at 8 trillion shillings, Uganda shillings, of which 5 trillion is already invested in government treasury bills and bonds. The total regional savings are at about $18 billion, and these savings all need to be invested in assets to provide meaningful returns to contributors and pensioners. Ladies and gentlemen, the trustees of these long-term savings, who are the providers of capital, need to be confident about the safety of their funds before investing. The standards of the Capital Markets Authority has put in place, we should know as regulations, which we periodically revise, and ensuring strict compliance to these standards is what gives financial investors confidence to invest in Uganda and the region. You see, we are simply a screen or veil through which those who seek capital and those who need to go through to access those savings. Essentially, we are like a gatekeeper as the Capital Markets Authority. Our vision as an authority is to establish Uganda's capital market as the most efficient and trusted center for attracting and providing capital in Africa. It's against this backdrop that we decided to lead the preparation of this 10-year Capital Markets Development Master Plan. It's got 3 key objectives. The first one is to increase access to alternative funding, that's domestic, regional, and international long-term savings, in order to reduce the pressure on bank financing, particularly for medium to large companies who are adding value to natural resources, who are into agro-processing, into light manufacturing, mining, energy, etc. That's the first objective. The second objective is to increase the size of the domestic savings, both voluntary savings and contractual savings by law. And the third objective is to improve the efficiency and effectiveness of regulation, the stock exchange operations, the brokers and fund managers who are licensed and operating in this market. More specifically, Your Excellency, the master plan specifies the following 6 broad reform areas. The first one is government leadership. This is very, very important and is key, is a first key recommendation for this stage of the evolution of our capital markets. The second is expanding issuance and enabling more capital raising. This reform pillar is comprised of about 10 of the 27 recommendations in the master plan, and is perhaps the most important because, as we all know, we've had it's been a long time since we had an issuance in the stock exchange, the last one being Umeme in 2012. It includes increasing exposure of existing debt and equity instruments, getting the growth enterprise market segments to work, raising awareness amongst potential issuers, reviewing the fiscal regime for purposes of ensuring tax neutrality, and improving the quality of financial reporting amongst corporates. This is one of the main bottlenecks for preventing access for the quality of financial reporting and corporate governance. Widening the investor base and investor choice is the third objective. This pillar also constitutes about 6 of the 27 recommendations and includes widening the investor base through increasing savings options, pension reform, market awareness, and launching a national savings product. The fourth is making market infrastructure more cost-effective. This has 3 components, including removing some regulatory duplication with respect to depositories, eliminating settlement risk, and improving the effectiveness of the operational processes. The fifth, ladies and gentlemen, is improving the legal, regulatory, and supervisory environment. This also has about 6 components out of the 27 the recommendations that we have, and revolves around the need to review and amend the legal and regulatory framework for capital markets to ease issuance of securities, eliminate duplicative procedures and allow for innovation and product development, review the law governing collective investment schemes, as well as developing specific guidelines for infrastructure bonds. It also involves reviewing the NSSF and UBRA investment guidelines. Improving financial intermediation is a final objective of this master plan. Ultimately, we'd like to see companies listed in Uganda on the Uganda Securities Exchange attain the Morgan Stanley Capital International Frontier Market classification in order for Uganda to be able to attract large global institutional investors into our market. This will require several reforms which are captured in the Capital Markets Development Master Plan and include encouraging the largest companies in Uganda to become publicly listed, having efficient trading, clearing, and settlement infrastructure, building strong market intermediaries with the prerequisite skills, and developing an effective and facilitative regulatory framework. Ladies and gentlemen, this master plan is a collection of thoughts, recommendations, and actions that we all need to take to improve the competitiveness of our capital market industry as a provider and source of patient capital. Working with the membership of the bodies such as Manufacturers Association, Chamber of Commerce, Chamber of Mines and Petroleum, Electricity Regulatory Authority, and the Private Sector Foundation, we are more than determined to ensure that the goals of this blueprint are fully realized. Our industrial sector needs to appreciate the existence and benefits of this alternative form of funding, what they need to do and in order to access it. We envisage this plan will be updated and reissued every 2 years. Ladies and gentlemen, in conclusion, I would like to thank the Minister of Finance and the CMA Board of Directors for their support, and the management and staff of CMA for putting this master plan together and getting this day organized. Allow me to make specific mention to the great contribution of FSD Africa, represented here by Mr. Mark Napier, who founded the development of this master plan. Reforming Uganda's capital markets to better provide capital is an imperative as we seek to transform this country into a middle-income country. I call upon all present to be ambassadors and advocates of the capital markets in demonstrating their relevance to this national goal. God bless you all, and thank you very much.